My journey has been in the property space. I don't think I'm anywhere close to where I would have liked to have been. And I think everybody, depending on their circumstances, when you get to this age, would feel that way. Look, I'm 47. Your mortality becomes evident. When you're younger, you're 10 feet tall and bulletproof. The stuff that seduced you when you were a younger man doesn't seduce you as much now in terms of the roles and the titles. I've done the climbing of the corporate ladder and I've got to the top. If I can be very honest, it's very lonely. The reflection for me is that I need to be doing more. I need to be doing things quicker. I need to be diversifying more. I've also started to recently look at whiskey. So I'm not just thinking about property, ETFs, other commodities. There's whiskey as well that's part of that. My brain has always been that way inclined, so I've looked at those things and tried to understand them. I go back to what my father used to say, which is you need to understand it. My journey has been in the property space. I by no means would claim to have climbed some virtual property ladder because I don't think I'm anywhere close to where I would have liked to have been. And I think everybody, you know, depending on their circumstances, when you get to this point in your life, when you get to this age, would feel that way. You know, you're always being more critical in terms of where you should have been over where you are in terms of your financial situation. And I think one of the reflections that is probably the most prominent one for me at this stage in my life, like I'm 47 now, right, has been your mortality becomes more evident and you become more aware of it. It's always something that's been it's always at the back of people's minds, but when you're younger, you're 10 feet tall and bulletproof and you don't really think about that. But when you have got to beyond your half-life, you have more runway behind you than you have runway in front of you, and you think, what now? Where to from here? Do I have enough to be able to have a good life from this point on? The stuff that seduced you when you were a younger man doesn't seduce you as much now in terms of the roles and the titles. And I've done the climbing of the corporate ladder and the slippery corporate pole, so as to say, and we've got to the top, but there isn't anything there, if I can be very honest. It's very lonely. So been through all of that, and I think the reflection for me right now is that I need to be doing more. I need to be doing things quicker. I need to be diversifying more. And so my focus over the last few years has really been in diversification of assets in order to accelerate my financial position. So I've actively invested outside of KiwiSaver. I've actively invested in other funds and portfolios to have a really diverse asset base between commodities, securities, and so on. I won't claim to be as I said at the beginning, an avid kind of investor. Definitely not a Warren Buffett or close, but I spend a lot of time listening to podcasts from people like Dave Ramsey and others who share some
Dave Ramsey's really good.
Really good strategies. It's a very American perspective, and he talks about the 401k and all these sorts of fantastic things. And I think you need to bring that into the New Zealand context. You also need to bring it into the New Zealand ecosystem, because a lot of those strategies don't necessarily work in our ecosystem right now as it currently stands for a lot of people, right? You talk about the 50-20-30 rule, you know, in terms of how you spread your income. He talks about, you know, generating savings. I don't want to talk about him, but I just want to talk about what I do in that context. So I think there is a lot of, the focus for me has really changed a great deal in terms of understanding the landscape better, educating myself more in terms of the strategies, being clearer in terms of how I approach it, my goals and so on. So that's been my approach in a nutshell. And we can unpack that and we can dive into that if you like.
Yeah, that'd be cool. I mean, I had Dave Ramsey as well for me, actually, years ago when I was working on a different business. He was actually one of the main reasons why I started getting proactive with my wealth, or my personal balance sheet, should I say. And that's become a large focus of mine. And I think what he does, and there are other ways of communicating, but you know, it's quite a bit of entertainment with his podcast too, because it's basically, again, it's other people that are facing these challenges that then you go, oh, it is possible, you know, like, oh, there is a step-by-step path. And I think, unfortunately, And actually, fortunately for us here, potentially, is the burden of debt is not as great as in the US in terms of how they start people off. Obviously, student loans are much greater. Car payments are much more popular, like to have a car on finance in the US, and other credit products for consumption, typically more popular in the US. If you look at the level of credit card debt in the US versus New Zealand, it's much higher in the US, not just because of population, but that first step of getting a little bit of a plan and a bit of a structure is such an important thing. And I think that here in New Zealand, that needs to become a bit more of a focus. And then what the US have that we don't is we don't have that confidence here, I don't think, to actually invest with confidence. Which means that there's lots more cost to investing because there's more middlemen, there's higher fees than the US typically. You can do a Roth IRA or a 401k and it can be self-directed and the fees can be super, super low. And, there's that culture of contributing 15% of your income into your investments, which doesn't quite exist here yet. And it's evident by the data of the net worth or the wealth per capita. In the 60s, I believe that New Zealand was the third wealthiest country per capita.
Wow.
And now we're below 20. I don't know where we are exactly today because we actually just dropped off of the graph that I was looking at in recent years, but we started at third. So why aren't we anywhere? Why aren't we in that top 10? So it's a really important question. And actually, conversely to the property piece, it is actually because there is a over leveraging or we're overweight property in a sense. And it's actually, it's not that property's bad, it's that property is just inherently less productive than a business. Especially when you think about bringing people up. And ultimately, I think the best way that you can, it's not the best way, the most likely way to get a non-linear return is obviously to start your own business. However, that has its inherent risks, right? If you have a career and you earn well for your entire career and you save frugally and invest well, you're probably, on average, you'll probably have a better return than people that try and start businesses. But in terms of non-linear outsized returns, you get that from starting a business, but it's not the only path. There are so many paths. So going back to your construction and your plan, what does that look like in an operational way then, or has looked like over the last couple of years?
Look, those are some really good thinking points that you've raised over there. Let me see if I can respond to that and sort of just deconstruct my response based on what you've just said. So the first is that you mentioned about New Zealand being among the top, 3 or 4 richest countries per capita. It was, and not so much in present day. Having had the opportunity to be plugged into various ecosystems, economic ecosystems, you talk about the likes of India right now. Right. I'm very close to what's happening in the Indian economy. India is truly a powerhouse and was always meant to head in that direction. But India as an economy has got many challenges. When I think about New Zealand, I feel that there is a level of maturity in terms of the consumer, but at the same time, I feel there is a lot of apprehension to look at various other asset classes outside of property. And it's only now that people are starting to look at those things. And I'm not talking about people who've been in the investment game for a long time, because those are really smart, financially astute people who would typically diversify, but the everyday mom-pop New Zealander would gravitate towards property in the first instance, and only now that financial literacy has started to improve, people are starting to look at other asset classes, other securities, commodities, and so on and so forth, right? My brain has always been that way inclined, so I've from the beginning looked at those things and tried to understand them. And I go back to what my father used to say, which has really driven a lot of my thinking, is you need to understand it. Because my dad has been an investor for many, many years. He used to be in the technology game for over 4 decades, and in the last decade and a half, almost 2 decades of his life, he was responsible for financial systems across Kuwait and Bahrain, so Bloomberg's, Reuters, all these sorts of things, and really understood the investment banking game very, very well. he brought that knowledge back to India when he came back in 2000 and implemented that in India with a group of investors. Went from long-term investment in stocks through to stock trading, made money, lost money at the time of the two GFCs and so on. So that's been my anchor point, and he's always been my guide in terms of think about this, look at this. Recently we were having a conversation about how potentially look at selling that in the future, because the New Zealand dollar was is much stronger against the dong at this point, but that might change as things progress. So there's that sort of stuff. Coming back to answering your question around my approach, my strategy has been to try and look beyond property. I'm doing that more now than I ever did. I was very conservative in the past, but over the last few years, it's been to look towards other asset classes and diversify where I can. Look, if you think about it from an everyday New Zealander point of view, people don't think like that. People don't talk like that. I'm not saying I'm the only person. There are lots of people who have this sort of mindset, but I think life has become really tough in the last few years, leading up to COVID, through COVID, and now, where people don't really have a lot of the breathing room to be able to start to think about diversification, right? Everybody's trying to find the pennies and cents to be able to pay bills.
Yeah.
So how the hell are you going to think about diversifying in ETFs and funds, and your brain doesn't even have the capacity to go in that direction, right? So my strategy moving forward is going to be very much around being more liquid.
Yeah.
You can't swipe your property. You can't take your asset. Yes, you may have a property and you may have equity and you may be able to leverage it, and all that stuff is fantastic, but the banks have been quite tight over the last few years, and that really limits your ability to do things. So I think my advice to people would be try to be as liquid as you can, because that keeps you more agile, that keeps you more nimble, you can pivot, you can move, and that comes through having more liquid assets. I've also started to recently look at whiskey.
Oh, okay.
I'm currently working with and this is still in its infancy, opportunities to look into generating wealth through whiskey. And that's specifically whiskies in the Irish and the Scottish markets, investing directly in casks or pallets of either young whiskies or whiskies that have gone beyond that 3-year mark. I was having a conversation with somebody yesterday who brought a deal to me for a 4.5-year-old whiskey from a distillery called Blenderloch that has recently acquired somebody by the name of Dr. Nick Savage, who used to be the master distiller for Macallan and has gone across to Blenderloch right now and has released this amazing batch. So there's almost a 20% return on investment annually over the next 5.5 years if I invest the X dollars in that cask today. Yeah. And then there's an exponential growth potential beyond the 10-year mark, which is what whiskies are normally gauged by, to double, triple, quadruple that investment. So there you go. So I'm not just thinking about property, ETFs, other commodities. There's whiskey as well that's part of that portfolio.
Yeah, I wanted to double click on a few of those pieces that you're talking about. I think, alternates have become more popular over time, which I'd put in the whiskey category as an alternate investment type. And I guess it goes to different platforms and everything coming out that are basically allowing that and making it more accessible. Probably has similar challenges, though, I would say, in reality to property, similar challenges in terms of that liquidity point. But I really wanted to dig into that liquidity piece as well, because it's something the FMA have also been really interested in at the moment, is liquidity.
Yes.
Because it's so fundamentally important when you're going into that decumulation phase of your life. When you're accumulating, you don't care so much about liquidity, but when you're then starting to think about, okay, I actually need to generate some income now, or there is an unexpected expense and I need a bit more than your average income that you may have forecasted, then people, especially in New Zealand, that may have, we always hear it, right? Asset rich, cash poor. Yep. It's like the common thing out here that I hear, and it is a really important part of the puzzle, because liquidity in markets in general is everything. Mm-hmm. When we talk about really hot the stock market, right, and we think about when assets get really they trade at a premium. What's interesting is, and I think what we need to do more time, and we need to spend more time doing, and in general people will gain from, is actually understanding how auction-based systems work.
Yep.
Right?
Yep.
You can always buy, but you can't always sell.
That's correct.
Okay, and that is especially acute when you get into an auction-based system, like, for example, crypto or equities.
Yeah.
Like, you're not, the next person that's actually willing to buy might be $20 lower.
Yeah.
So that means when you're trying to get out, you may be forced into a situation where, liquidity has a massive role on a mark-to-market investment.
Yeah.
Right? Because tomorrow there might be liquidity and that $20 difference is no longer there.
That's correct.
So I think auction-based systems are not understood well enough.
Mm-hmm.
And it's basically that there's supply and demand, and on one side of the aisle there just might not be any buyers today. And that doesn't necessarily mean the investment's worth less. And it may also mean that investment is not worth actually what it's trading at today.
Yep.
And I think value is just one of those things where you can use traditional methods to obviously work out what a company's net present value is, and then also the market emotions and momentum and excitement often play a role in highly liquid markets, and also property. We have seen that, speculation exists across the full spectrum, and then it's quite interesting as well, because you can't leverage up normal investments really on a typical basis. If you're looking at investing in a startup, or you're looking at investing in whiskey, you can't go and buy 5 cases but only put money into of the whiskey, but only put in one, money enough for one of them, and then borrow the rest. So property is always perceived as being safe because it's tangible and known. But from a fundamental perspective, there's inherent leverage in it that doesn't actually exist in every single investment type, or most investment types that you have access to outside of property. Anyway, that's what I was thinking. That was just my thought.
Yeah, no, that's actually very valid. I think property is probably the only only asset class that you can leverage against.
5 to 1.
5 to 1, thereabouts. And it's the one asset class that I believe you can invest in through leveraging and borrowing. But as you will know, when you think about the likes of Dave Ramsey, and he always says this, he says you don't borrow to invest, right? You don't do that unless it's property, in which case it's leveraging your equity as opposed to borrowing from the bank and then investing that into funds and other asset classes. I would never borrow to invest in whiskey.
Yeah.
For example, right?
Yeah.
And if we just double click on whiskey, there is a lot of predictability in that market. And I've started to understand that more, even though I know the product very well, right? I've been into whiskey now as a consumer of whiskey for the last almost 20 something years, right? Maybe longer. But as a collector of whiskey over the last 15 to 17 years, I've got a sizable collection of whiskies that I can very comfortably put onto the likes of Whiskey Exchange and other auction platforms to be able to get a sizable, a sizable valuation or return. And I know that for a fact because I've done that and I've insured those whiskies that I know are only increasing in value. And there are a number of factors that influence that. So I understand the product, I understand the market. What I did not understand was whiskey as an asset class, and how does that work? How do you value something that is worth 4.5 years? How do you then value something in terms of its annual return as it matures? Because the maturation is where the money really is. And then how do you measure that in terms of the trend? Now, what I know is that if and again, we're just talking about that asset class, anything beyond 3 years, you can call it whiskey, right? Because those are the regulations. And then you can be very specific in terms of what a 4-year-old or 4.5-year-old whiskey is worth in today's market. You can be very clear, you can be very specific about that in terms of its value in the cask, right? But what you can't be clear about is over time, what would that look like? Because there is a lot of fluctuation and variation. There are a lot of trends to tell you that, but there's a lot of fluctuation. And then beyond 10 years, it's anyone's guess, right? The older it gets, everybody knows that older whiskies, for example, if it's sitting in the barrel for up to 20 years, the growth is exponential, right? Whiskies that go beyond 18 years usually fetch 10x of their original cask value, for example.
But it is ultimately driven by what someone's willing to pay, right? So what the collectors are willing to basically buy at.
It depends on what market you're playing in, right? So if, say, for example, and I know we're zooming into whiskey, but it's a very it's relevant, it's topical for me right now. I think people, if you are if you're investing in a bottle of whiskey, right? It's something that has been poured, right?
Yeah.
As opposed to cask whiskey, which is still maturing in the barrel, in the cask. Those are two very different things, right? I'm talking about the one that's in the cask, and you have got brokers that can give you very specific valuations and rate of return data as well to be able to tell you what your rate of return will be if you were to sell that, or could be if you were to sell that cask back. So you sell it back to the distillery. You don't sell it into the open market. You sell it back to the distillery.
They basically have brokers that will then go and...
They will then sell it on to a bottling company or whoever else. So that's a really interesting. That's a really interesting area. Now, do we have platforms for that sort of stuff right now that provide AI-driven insights? No. We've got to rely on people who are telling you these things. You've got to rely on your knowledge of the industry. You've got to really understand the nuances between Scotch over Irish whiskey, the Irish whiskey industry, over the whiskey industry that's emerging in Taiwan or Japan, and because these are, or even India, right? It's a massively growing area. So I think we're talking whiskey, but the bottom line is you need to understand the product, right? So if you're getting into ETFs, or if you're getting into any specific type of equity stocks, you need to understand what you're doing. You don't just go by what the punters are telling you.
Or the logo.
Or the logo. You have to understand what the market's doing. You have to understand your investment strategy and your approach. Where AI tools come in, so the likes of Hatch and Sharesies and all these other platforms, and in the future, a lot of them are now incorporating AI into their platforms, right? I think the question for a lot of the platforms out there, including yourselves, is how do you surface those insights? How do you provide those insight and there's foresight? Both those aspects need to be brought to the fold for people to sort of look at that and go, I understand it, it's simplified enough, it's giving me all this literacy which I need to have anyway in order to push the button and buy that particular asset class or that particular product. And I think that's the key question, I think, at this point in time, in my mind at least.
Yeah, I agree. I would say that, traditionally brokers, and that's why, because technically our platform's broker agnostic, so if you want to connect another broker to execute through, you technically can. I would say where we felt like there was a need was that a lot of the brokers weren't actually giving as much information natively in platform as they could. Typically, the financial data and other information wasn't necessarily as deep as I would personally want it when I was trying to build the product. But then actually I would say that's the delivery mechanism, which is also very important. So we spent a lot of time on, curating over 100 years worth of equity data, financial data, and having it in one platform that then could be utilized. But it's also actually, how do you put that in the context of someone that doesn't have, an interest or inclination like myself to spend 5 or 6 hours without moving, looking through, balance sheets because I'm interested in it. I think the delivery mechanism is where AI and platforms need to be looking to go the extra step, because like you mentioned before around your interest in whiskey and investing in that asset class, it's trying to gain some knowledge that provides you conviction so that you can stick through and you can get through the more turbulent times. And I think that's what I spend a lot of time thinking about, is that delivery mechanism, because understanding and conviction are very closely matched.
No, that's absolutely spot on. I think, and I'm going by the interactions I've had with people around me who are very interested in this area. I'm very fortunate that both my father and my father-in-law have got very sharp financial minds. My father, who grew up in the world of investment banking, working for the second largest investment banking firm in the world, Gulf Investment Corporation. At that point in time in the 1990s, they were investing over $5 billion US daily in foreign markets. And my father-in-law, who was a banker, working for one of the largest government banks in the subcontinent. When I talk to them, this is what I get, right? So firstly, the intuitiveness of the platform, right? Accessibility to the various asset classes. Can I see them? Is it easy to understand? And does it provide me enough insights in terms of what's happening in the market across the various, securities or asset classes? Is it giving me enough spur of the moment information that I can go, yep, that looks like a good idea. I understand it to an extent, but there is some more literacy around this particular asset class. There's some more information that is going to help me make that decision. Because a lot of times the difference between people making a decision and not making a decision is lack of information.
Totally.
Right? It's not lack of knowledge, it's lack of information. That information helps inform their thinking. Like with the conversation I've been having recently around the whiskey piece, where I've said to the guys, I'm sorry guys, I understand this really, really well. I get it. I understand investing and the financial markets well at the same time, but what you don't have, what you're not able to give me over here are those little pieces of information that's going to take me from somebody who's skeptical to somebody who's now convinced that this is a great idea. So I think that's absolutely right. AI, in my view, is going to bridge that gap between the information that's out there in the broader ether to furnishing that information to the person in a way that a non-financial brain can understand it and go, I get it. I know what's the difference. I know that this is not something I should be doing right now, but this is something I'm going to lean into, kind of thing. So I think that's where I feel it plays a major role. Yeah, so there's the simplicity, the intuitiveness, the accessibility to this information. I think that's where AI can really help. And look, I'm very close to AI as a platform and as a mechanism in other walks of my life as well. I've been working with AI before generative AI even became a thing through ChatGPT in the mainstream world, in advanced analytics and other areas over the last few years, and even now in healthcare. Right, so I understand it to an extent where I know its capabilities, but a lot of people don't. Right, so the question for yourselves as people building these tools is, how do you simplify it? How do you make it really intuitive and be able to present that to people where they go, I don't need to be a financial guru to understand this, but I have enough information to make the call and hit the button.
Yeah, it's also, what's the right interface for the job.
Yeah.
And there are different you use a different interface for different jobs.
Yeah.
Is the chat interface the right interface for the different type of tools that you might be using? Is a chatbot the right tool for an investing platform? In some cases, yes. In other cases, you would want a different interface to make it better. What we found personally on our journey is that curating the right questions and helping the user with the right questions is actually a really important part of the puzzle, because the problem with the challenge with the AI as well is being able to ask the right questions.
Also, you don't know what you don't know, right? And in using a lot of using a lot of those tools, like you say, you got to know the right question to ask. And if you don't know what you don't know, how are you supposed to do that?
Exactly. That's a very good point, right? You have so much information out there, more so today. It's like stating the obvious, more so today than you ever did. Technology's ability to go out and mine this information and surface the information is far greater than it ever was. But what that leads to is information overload, where people know that
too much choice.
You do too much choice, and you don't know. Today you ask one question and you get a million responses, and so what does this mean? How do I, like, among the 5 or 10 platforms that are out there, where do I start? What's the best choice based on my circumstances, based on what I'm thinking of doing? How can I go from not knowing nothing to having an idea of what's out there, to having an idea of what would be a good fit for me, to then identifying products and securities that are the right fit to that, and then going to the next step where I can look at something and go, I can look at a security or look at an asset class and go, that's the right asset class for me, and I know what that would look like if I project into the next 3 to 5 years or further on. So I think that level of intuition, that level of information is where I feel is what I feel would set you apart. I think, in my humble opinion.
Yeah, I mean, well, yeah.
Yeah.
Yeah. No.
Thank you for sharing that point of view.
Yes. No, I've been thinking about it a lot recently, because I was talking to a friend of mine and we're having a whiteboarding session, and there's just a lot of information out there that's, what does it mean? What does it mean? There's geopolitical things going on. What does it mean? What does it mean? What does it mean? There's so much what does it mean out there. But what people, I think, ultimately want and desire is, what does it mean to me? You know?
Yeah.
What does it mean to me? And I think that's really interesting, I think, as a concept. And then the other thing is, what does it mean if I don't have enough time to feel comfortable or confident? How does a platform, or how does artificial intelligence, how do products and services provide the lightening that burden as well?
Yeah.
It's a trust thing, right? So like if it's like dealing with people. So, I will take the advice from people that I trust. So if a product, which is AI based, if I have trust in the fact that they're going to give me the right information, then I'm going to use it.
Well, especially if
It's a very important point. And just on that point, I think that aspect is investing is a very personal thing, right? Because I'll give you an example. When you are managing financials of organizations, and I've been doing that for a few years, organizations, programs, and so on. We're talking about in the hundreds of millions of dollars over the years. You have a very high degree of diligence and controls and other things that you implement in order to make sure that you've got a really good handle on that, right? But I can assure you that when you bring that into a personal context, the one thing that is missing in terms of the way you approach it in a corporate environment where you are, for all intents and purposes, accountable or responsible for that budget, it becomes emotional. So that emotion is what drives your decision process. Even though the monies that you're talking about in terms of your personal balance sheet is much smaller than what you would otherwise deal with financially in a corporate environment, there is an emotional element to it, which is what influences how people think and how they approach it. And therefore, they look for more trust. Like, do I trust? I'm giving these guys my nest egg, right? Are they going to squander it? Are they making the right decisions? Am I able to see what they're doing in terms of the investment portfolio? So I
is
invest
it safe?
Is it safe?
Is it safe?
Is it safe?
Where is it going?
100%. So I invest in a few things. One of them is in a few funds. One of them is managed by Milford Assets.
Yep.
And I thought long and hard, and I did a lot of research before I decided to invest with Milford. I have a very intimate understanding of the various securities and asset classes that are within the fund, and I keep a close eye on what's happening. I'm constantly looking at rate of growth. I'm constantly looking at how much I have made over the last 12 months. I'm also looking at now diversifying into an equity class, which is a separate thing, a much lower point of entry. So because people are thinking about that, nobody has. So for example, if I talk about whiskey, coming back to whiskey, sorry about this. I don't have a problem. I'm just exploring that. That's why it's top of mind. There was an offer brought to me the other day saying, why don't you invest in this? It was a batch from a boutique distillery in Ireland called Copeland's that were doing 20,000 litres a year, projected to grow to over 2 million litres a year, rivaling some of the biggest in the industry, from the Bushmills of the world to the Teelings of the world, who are the biggest distilleries in Ireland. The one thing that inhibited or just switched me off immediately was their point of entry. They said, the only option you have over here is to invest in an entire pallet, which was 6 barrels of 225 litres a barrel at a cost of about £27,000.
Yep.
Point of entry. Right? Now, these guys are investing in the global market, so they've got people with very deep pockets who might have 50 grand New Zealand dollars to chuck into a pallet of whiskey, which is 6 barrels. But not every New Zealander has that. Or even if they had $50,000 lying around the place, they wouldn't be chucking that into that asset class because they don't know enough. They don't have enough information. So I think it comes down to how are you going to get people to that point where I've got all the information I need, I understand it, it's simple, there's efficacy, there's trust, bang, I can make a decision now. And where they would not invest, they would, and where they would invest 10 grand, they would invest 50. That's the point. That's what I think is the clincher over here.
Well, yeah, I think it's about becoming comfortable and getting to a point where you're emotionally at peace with making the investment. And I actually think, because we have this feature on the platform where people can make these asset lists, and they're basically watch lists that actually track performance. So if I have a thesis, I might make a asset list and it will track the performance over the time that I specify. So let's say a month, okay? What we've noticed is lots of people create these lists, but they don't make them public. And it's because people don't want to look like they don't want to look silly.
Yes,
a lot of investors
exactly.
A lot of investors are very concerned about how they look.
I think that's just people in general, though.
But in general,
Yeah.
Yeah.
And I think one thing that I would say to anyone looking to get into investing is you can actually make a really sensible decision with the information you have and lose money. And professional investors do that every single day. And I would go and say, go read the book Thinking in Bets, because one thing that can really help in life is actually disassociating outcomes from decisions. Because you, with good information, can make it, with incomplete information, can make a really reasonable decision and have an outcome that you didn't desire. And I think that we get too attached with, oh, well, this outcome happened, so that means I'm worth this. When it's no, actually, I made this decision with all the information I had, and I'm actually happy with that decision.
Yep.
If it doesn't turn out the way I wanted,
Yeah.
or my expectation was,
Yeah.
then I'm not less of a human. You know, I'm not worth less. I just made a decision with a bunch of information, and the outcome wasn't what I desired.
Yeah.
And I think that holds people back, especially if they have a loss. Then that really affects them mentally or emotionally. And I think it's tied to, we've been programmed to value ourselves off of outcomes, not off of good decisions. Because you can play really well in a sports game, but come second.
Yeah. Look, I agree with that. I'll just add a dimension to what you've just said. As I said earlier, your programming evolves over the years as you get older, right? So your perspective now is going to change rapidly as you get older, and the things that are important to you now, the stuff that seduces you now as a younger man, will not seduce you when you get to my age as much as it does now. So there are different in all walks of your life, and I think there is, in all of this, there is an emotional element, right? It becomes more amplified as you get older because you know you've got less of runway to fix the problem should things go wrong, and things do go wrong. You know, they always say start early, start sooner, and you have a better chance to pivot and move. It's a word that's used quite loosely because your ability to pivot is hampered, significantly as you get older because you don't have a great deal of room. So there is an important lesson in that. You have to think about the various, the investor psychology based on the various personas and the various age. I think age has a major role to play in that because I keep coming back to the stuff that I was talking to my mother yesterday about, the stuff that's important to me now that was never important to me then. The questions I ask her now about how I was as a child growing up and what are the things that pissed her off over the things that, because I'm going through it right now with my own children, right? And then they were never important to me then, but now they are. And you would get that, right? When you have children, you look at life differently. Your value system changes. The things you find important in terms of your life are not as important now than they ever were, right? So there are lots of those factors. And look, I think the bottom line is that investing is a very personal decision. If you're looking at wholesale investment and all that sort of stuff, then it's corporations investing and all that sort of stuff. But when it's more mass investment in the masses, then you have to bring in the emotional quotient in that. And how do you use AI to be able to gauge how someone is feeling at that point in time when they are about to make that investment decision? What are the things that are going through their mind that you need to be able to pick up on and provide back as information to them to go, hey, based on
do you know you're feeling like this as well, right?
Well, that's right. And then you go, and then they go, yeah, this robot gets me.
Yeah.
You get me, and then you go, yeah, I'm feeling a lot better now because I can trust that you have taken these aspects into consideration.
And it's that thing, a problem shared is a problem halved, right?
Yeah, that's right. That's absolutely right. Yeah.
That was great.
Very informative.
That was awesome.
Thank you.
Learned a lot about whiskey.
Well,
It's interesting though, because you can take that and use that idea with lots of different products out there, right?
exactly. And because it's relatively new, I think you bring in some of those more fundamental sort of things that you would otherwise not think about with, or generally just on that point, people don't want to look like fools.
Yes.
And therefore they don't ask all the questions, right? They don't, like there are a lot of things, I don't know about lots of things in terms of investment, both assets, but I'm too afraid to ask because I don't want to. I
don't
don't want to
seem
come
less
across
intelligent.
Yeah.
Or
well, that's right.
Misinformed.
It's human behavior, right?
Yeah. Maybe that's
Yeah.
That's I'd say that's often.
It's also something that they say that when you're younger and you know less, you want to come across as knowing more. When you get older, you know more, but you don't have an issue with coming across as knowing less.
That's so true.
Yeah.
And you ask more
True.
questions and you go, hey, I don't know this.
Yeah.
Can you please explain this to me? Right. So I think if you bring that thinking into the way you build the platform, I think that would really go a long way.
Totally. Yeah. That's something I think lots of stuff. Yeah. I agree with and resonates with me totally.
Good man.
Thank you. We really
Thank you.
appreciate the
Thank you for
conversation.
having
It was
me.
awesome.
Thank you. Thank you.